Snapchat just released its Q4 earnings, and let me tell you, I'm pretty excited. I've got a lot riding on Snapchat, so I own almost 73 grand worth of shares, as well as a ton of calls, 160 calls, so I'm very invested, let's just say that. Today they were down about almost 3.5% before they released earnings, and now they're up just over 3% after hours. It shot up to 635 after hours, which is close to 8%, but has come down since then. But today I'm going to analyze their earnings and give you my grade, see what I think will happen next. So, first things first, they made money. They finally made money. They made $45 million compared to $9 million last year. And they hadn't had a profitable quarter yet this year, so it was good to finally see that. Their revenue was up. They increased their revenue to $1.7 billion, which was an increase of 10% year over year. That's good to see. And they increased their average revenue per user. Almost all of their financials were positive and outperformed expectations, which was great to see. What I loved to see, maybe the most, was that they grew their other revenue substantially. If we look here, other revenue increased 62% year over year. And their Snapchat Plus subscribers growing 71% year over year to 24 million. This is how they're going to take their next step as a company. The other thing, they increased total active advertisers by 28% year over year. So in all facets of their business, they're improving how they make money, which is obviously critical to having a great company. Next thing I wanted to discuss was average daily active users. This did come down from quarter 3, which is a little bit concerning, especially because most of it came from North America. So that's something to watch for. It's in part due to they're spending less money on marketing and advertising. They're not as focused on growth anymore. They're focused on profitability, which is a good sign. And we see that in the other numbers. They're increasing their margins. They're making more money. But they might not be able to grow their users as fast. But that's okay to me as a shareholder. I don't care about users. I want them to make money at the end of the day. They've been growing long enough. They need to prove that they can monetize on these users for it to be valuable. They still did have an increase in monthly active users, which is good to see. Around 6% total year over year, and that's globally. The other thing I think to note is that they're still expanding rapidly in the rest of the world. Majority of the money that they make right now is from North America, which obviously took a hit in users. Even despite the loss in users, they were able to make more money off of them from Q3 to Q4, which is all I care about as a shareholder. On top of this, the revenues are increasing dramatically in Europe and in the rest of the world. And looking at a year-over-year basis, last year they lost almost 700 million. This year it was down to 460 million. So they're taking the next turn to become profitable. And I think it might just happen next year. They're very focused on increasing profitability because that's what shareholders want. And I think they're going to do it. I really do. As you can see, their revenues are trending in the right direction year over year. That's what we like to see, up and to the right, which is exactly what's happening. You see their margins are relatively flat, and their adjusted gross profit is also up and to the right. That's what we like to see. Finally, what we care about most, the EBITDA. As you see, they peaked back in 2021, and they were declining. That's why the share price fell so much, but they're well on their way back. And they've never made more money as a company as they are right now. Yet the share price is at all-time lows. It's crazy. It's down 46% in the past year. The past 5 years, it's down 89%. They were trading for $75 the last time they were making even close to this much money. And I am by no means saying that this is a $75 stock. Their growth has slowed tremendously. I'm going to be loading up on the stock. Anything below $7, $8. I think this is easily a $10 stock just for the risk to reward. It's an asymmetric risk reward right now. Like the upside is so much more than the possible downside. And I truly do think that they will reach profitability in 2026. That's super exciting. We could see this stock go easily back above 10 up to $15, I think. So let me know in the comments what you think of their latest earnings and if you made any money on it.